So regulators have come in and seized Silicon Valley Bank, making this the second largest fall of a financial institution in all of United States history. This caught a lot of people off guard. This shocked a lot of people, and it raised the question, is my money safe? Banks are not in the business of losing money. So if a bank is selling securities at a loss, you know that something is wrong out of the bat. Welcome to the channel. My name is Dennis, and today we're going to be talking about the collapse of Silicon Valley Bank. So what exactly happened? Can this have a ripple effect? And what do we need to do to protect our money? So let's waste no time. Let's get right into the content today. But before we do, if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. So regulators have come in and seized Silicon Valley Bank, making this the second largest fall of a financial institution in all of United States history. Now, this caught a lot of people off guard. This shocked a lot of people, and it raised the question, is my money safe? When such a large institution falls, you got people just, whoa, like what is going on? And even if you're not necessarily involved with this specific institution, is my money safe across the entire sector? Signature Bank just fell as well. Ripple effect type of situation, and the fear is that it'll ripple effect even further and get really ugly over time. Now, we don't know the full extent, their exposure, other smaller institutions that were linked to them that were exposed to this. All of this is going to come out within the next couple days. Keep paying attention to the news, make sure your bank, your institute, ask the questions that we all are asking. Is my money safe? Now, this was such a large institution, so much money was pulled from it, but it's just a scary thing that all of us need to be aware of. So it all basically started last week. So last week, I believe this was on Wednesday, Silicon Valley Bank comes out and lets us know that they had to sell some securities at a loss. And they also had to sell new shares to raise capital. So if anybody doesn't know, banks are not in the business of losing money. So if a bank is selling securities at a loss, you know that something is wrong out of the bat. Banks are in the business of making money, trying to make money off of interest, off of trading, various different ways, fees and wealth management, depending on what type of financial services that they offer. But banks are never in the business of, here goes some securities, sell it and lose money. And at the point where you have to sell more shares to raise capital. Now, this does happen in the stock market at various times for various reasons, but in this situation, just not good news. And having to do both of them at once just went and showed you just how weak they were. And this just led to a whole bunch of withdrawals. When the news came out, people just withdrawing their money left and right. I think it was like $40-some billion on a given day, people just trying to take out their money, and the bank couldn't do it. At a certain point, ran out of money to actually give to people, basically became insolvent and just ended up in a very bad situation. And that's when regulators came in to stop the chaos. So a notable thing to mention here is that Silicon Valley Bank, the FDIC, actually came in the middle of the day. So typically in situations like this, when something has to be bought out or just shut down, it's done after markets are closed because you have more control, less chaos. It got so bad in this situation where the bank did not have money, basically insolvent, couldn't do anything, to where in the middle of the day, the regulators had to step in and just completely shut the operation down. Now, that's just bad. Now, other things that we have to consider here is that when rates were low, banks were buying long-term treasuries. So the Fed raised rates. So those treasuries that were bought at that time, the value of them was considerably down. Also, at the time when rates started to increase, tech companies or tech firms got hit very, very hard. So remember, during the bull market, the NASDAQ, the tech stocks, they were doing a phenomenal job. rates started to go up, and the exact opposite happened. Silicon Valley Bank, they did a lot of business with tech companies. So a lot of those tech companies, they would withdraw deposits in order to keep their operation running. And at a certain point where deposits got low, they had to sell these securities, they had to sell more stocks, and news got out, of people started withdrawing even more money. Ripple effects started to happen, things started to get bad, and things started to get bad quick. This was really from a Wednesday to a Friday, at the point where certain bad news came out Wednesday. By midday Friday, the whole operation was shut down. Now, can this have a ripple effect on the rest of the banking or the rest of the financial sector? Absolutely it can. Not saying that it will, not saying that it won't. No financial advice, but it absolutely can. And, since that, Signature Bank as well. It's, other banks are now starting to have to get bought out. Regulators have to come in. And the scary thing about it that we have to consider is that banks generally benefit somewhat from higher interest rates. So if higher interest rates are causing banks to become insolvent, what really is happening with other companies as well, behind the scenes, behind closed doors? These are all things that we have to think about at the point where, this bank, now Signature Bank, just recently, and more can happen as well. We don't know what everything that's on the books. At the point where people start taking money out, things can get scary. And if we start playing on fear, then, the whole system could really go down. Now, not saying that, doomsday is right around the corner, but we all have to be safe. Protect your money, protect your assets, know what's going on, and know when to react when things are going on. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.